United Airline has jumped a few dollars after earnings. Let's take a look why in today's episode of Buy or Pass. Hey guys, my name's Jose, and this is another episode of Buy or Pass. In this series, I will look at the financial documents of a company and decide if I was looking for another investment, would I buy or would I pass? Before we start, don't forget to hit that subscribe button to get info on new episodes and other videos. So let's begin. So for United Airlines, we're going to take a look at two files today. First, we're going to take a look at the files that they posted on their investors relations website. The second file is going to be on their transcript. I already took the liberty of reading both files, and I highlighted all the important information, all the highlights that I think are important for this earning and for upcoming earnings. So hopefully you guys don't have to spend the hour and a half or so reading through this material and finding the key points. I've already done it for you. Alright guys, so the first thing I highlighted was that the company remains confident that it will deliver on its long-term adjusted earnings per share targets of $10 to $12 in 2019, $11 to $13 in 2020. Just to keep you guys in perspective, I pulled out this year's earnings per share, and it's $9.85. So even if we average 2019, it would be $11, and 2020 would be $12. This company is expected to keep growing its revenue for the next 2 years. So that's definitely a great thing to see, and that's one thing I always like to see in a company. The next few things I have highlighted are, first, the expanding pre-tax margin increased 1.8% compared to the first quarter of 2018. This is just telling me this company has done some form of smart decisions to be able to save more of the money it's making. It's reduced the cost in some of its operations, so now it's keeping an extra 1.8% compared to last year of 2008. Again, total passenger revenue increased 7.1% versus the first quarter, right? So they're making more money from their passengers. The only thing I'm worried about at the moment, we don't see it, right, as revenue is still increasing, but how much revenue increase per passenger will be too much before passengers start switching in airlines. So that's just one thing to keep in mind of, but it's pretty good to have an increase of 7.1% compared to the first quarter of 2008. This company is repurchasing stock in the first quarter of 2019. It bought $527 million worth of stock at an average price of 83.68. I think it's right now about $88, so this company is even making money in investments. The company continues to talk about how it did so well in this financial quarter, which they made important progress on customer investments while making strategic decisions to manage their costs and producing a pre-tax margin growth. With this pre-tax margin growth, they expect to lead their peers, which means they'll be making more money compared to their peers just because of that pre-tax margin growth. So we'll take a look at how that margin growth is affected in the next episode, where we take a look at their financial sheets. And for this reason, they're very confident that they will reach their long-term adjusted earnings per share targets that they shared to us last year. And those are the actual numbers I shared with you guys at the beginning for 2019, 2020. Next, we'll just talk about some of the quarters highlights from 2019 first quarter. They flew the most revenue passengers ever for a first quarter in company history, and despite weather challenged first quarter, achieved the second highest mainline on-time departure rate performance versus the right. This company is still having a lot of passengers fly in, and they flew the most passengers for this quarter in company history. The company does not shortage of passengers. It's good that they're able to maintain their airlines on time, which means less angry customers, more returning customers. They also broke ground on a state-of-the-art technical operations center in Los Angeles that will enable the airline to provide exceptional service for all its aircraft fleets. That's a great thing. I'm not sure where else they have any state-of-the-art operation centers, but it's nice to have one at the coast where they probably do a lot of traveling. This would allow the company to service its fleets whenever needed. Next, we'll talk about customer experience. So the two things I highlighted here is the first is they introduced the re-image mobile app. So they did put money in their application just to help make the experience better for customers at this stage of age where everything is phone dependent. I do think it's very good for a company to have a strong application. It's definitely something customers nowadays take a look at. If they don't think you have, if a customer feels like your application is not easy to use, it can actually be a reason why they go to another company. So I think it's great that they're investing money in their application. And the second thing is this was they became the first airline to offer non-binary gender options throughout all booking channels. So this is more of a social issue, and the actual issue itself, it's important, but I think the main thing for our company is right now living in an age of airline business where social issues have become a very important aspect in a customer's relation to the company. So this will definitely drive more customers to it just because they have mentioned this issue, right? They have talked about it and they're doing something about it, which is going to get more customers to come on them just because that, like I mentioned, social issues are definitely playing a big role in what companies customers go to. Next in the network, we they talk about how they're still increasing the amount of services, hubs, and routes. They announced 11 new domestic routes. They've also filled an application with the U.S. State Department of Transportation to increase the total of 6 daily nonstop flights to Tokyo from 6 airline hubs. So again, the company knows where to fly. It looks like Tokyo right now is a great place to make more money, so they're trying to increase their flights to Tokyo at the moment. And like always, they're still increasing domestic routes, and they began new service from 4 hubs to 18 cities, 12 states, one province, and launched new nonstop seasonal services between San Francisco and Amsterdam. Like I mentioned, this company is increasing the routes. More routes means more passengers are going to go with them, which means more revenue at the end. So I think that was the last thing. That was the last thing I took from them. Next, we'll take a look at the earnings transcript. And here I don't have much either. For this first thing, they do mention from an operation perspective, this was not an easy quarter, especially considering the harsh winter, and that they also grounded the Max 9 Boeing Airlines, several other events. This is pretty confident for me. It's giving me a good vibe for the company. Even though it wasn't an easy quarter for them, they were able to beat earnings. They were able to increase their margins. They were able to have the highest revenue in passengers compared to any quarter one history, and it was all during a harsh winter weather and during the whole grounding of the Max 9 airlines. So imagine if everything was going smoothly, how well this company could have been doing. So to me, that is definitely a big plus. The next thing we have is, again, they're talking again about their implementation to new technology. So this is not on their applications. This is more of a lean for them. They are pioneering the implementation of a new technology called dynamic departure, which empowers frontline employees real-time data they need to make informed decisions on whether to hold a flight for a customer rushing to a connecting flight. This technology identifies flights for connecting customers who will be arriving a little late, where we have the opportunity to make up time in flight, still arrive on time, and wait for the connecting customer of the closing door and misconnecting them. This is a great thing, right? So this allows, if there's a customer flying in airplane A and they need to make, and their connecting flight is flight B. If flight B was estimated to leave Next, the company goes and talks on about this new technology, which they call dynamic departure. Something they've been testing out in Denver, and and is expected to save hundreds of connecting customers per day when fully rolled out. So the way this dynamic departure works is, let's say you're in flight A and you need to connect to flight B, but flight A is running a little late. If flight B is able, if this technology will tell the the flight attendants and the crew, if they wait for flight A, if flight B waits for flight A, will they be late or not? And if they will not be late, they will continue to wait for you, and like this, will not miss your flight, and they will still make it on time, and everybody's happy. This is definitely a great way, and they've been testing this in Denver. Like I said, they expect to save hundreds of connecting customers per day when fully rolled out. And again, happy customer means a returning customer. Again, means more revenue for the company. What else we have here? We'll talk about the MAX aircraft. On March 13, FAA announced the decision to ground them. They have a total of 14 aircraft on the fleet. This represents only 1.4% of their capacity. At the moment, the grounding has not affected them that much, but as the days go on and on, this impact will continue to grow. But they have been focused on caring for their customers whose travels plans were impacted. Finally, the last thing we do, again, talking about the shareholder repurchase, they purchased $527 million of shares in the first quarter. At the end of the first quarter, they still have $1.2 billion left to repurchase and plan to continue to increase their share repurchases. All right, guys, so those were the main highlights I got from their earnings call, their transcript, and the information they provided to their shareholders. I want to know, what did you guys get the most out of this earnings? Make sure to post it in the comments below. And again, don't forget to subscribe to the channel to get updates on new videos and other episodes. On the next part, I'm going to talk about more of their actual numbers opposed to what the company is doing with the money. So we'll take a look at Lazy FA next to see where the company is actually doing money related. Take care, guys. Have a good night, and see you next time.